Okay, folks, welcome to Market Wrap for Monday. All right, so the 10-year yield, weekly basis, we gap down again this week, and we're flirting with the lows of 2017. We closed at 2.07. The low of 2017 was 2.05. I mean, this is a real tell. There's a lot of fear out there, and that fear is finding its way into the bond market, seeking a safe haven. But I'll tell you, the markets had a fairly good rebound today, and I think we're going to rally here fairly soon. I think it's going to be a counter trend rally, and then we're going to roll right back over again. Let's take a look at the VIX. The VIX closed off the highs of the session. It doesn't mean it can't go higher. We did get stopped at resistance. The Stokes still look really good, higher lows, good stuff. But many times you'll see on a big down Monday, you'll get what you call turnaround Tuesday. And it may be a one-day rally, a two-day rally, who knows? I just don't expect it to last. The dollar, a confirmation breakdown on the US dollar. And that just sent the gold miners through the roof, literally, to the point where I had to hedge the position because it's just simply unsustainable. And we'll talk about that in a moment. Barun, I got your email. Barun had a couple of really good questions as to why I opened up the hedge, what percentage of my position is hedged, and how I plan on managing that position. I'll talk about that in a moment. So the dollar, double top, and a new lower low. It's over. The dollar is broken. That doesn't mean they can't try to rally and try to recapture the support level. I hope they do. The Dow transports, they closed up today, but well off the highs of the day. I still think that we'll float down here to around the 97.50 level. Stokes are flatlined here, and that's not going to last. So I think we're going to rally the next couple of days. The Dow Jones Industrial Average, reversal day, off the lows of the day. We were lower, considerably lower, and we flashed a doji star formation. Pardon my voice. That's a sign of indecision. It's a sign that we may get a counter trend move fairly soon. The S&P 500 daily chart, we bounced off of the 27.25 level. Volume was well above average. So it looks like they're going to try to defend this support level. But again, I just don't think the rally is going to last. The IWM, this was really the early warning signal that we would probably rally on the day, because I was looking at it midday and we were up and we were kind of flashing a doji formation. It was showing a little bit of stubbornness, not wanting to continue to break down on the day, while the S&P 500 and Dow Jones were really struggling. And then they began to rally back. The Dow Jones, of course, closing positive, and the S&P just got a kick in the seat off the lows of the day. Now, here's where the action was. The technology sector, I mean, it was down well over 2% at one point. We closed down 1.75%. We bounced off of the 200-day moving average. And support found today was resistance back here in October of 2018. Volume rose. So this is the antitrust concerns that we've had for over a year now. Those chickens are now coming home to roost, and they're not going away anytime soon. Whenever you have a bipartisan group on Capitol Hill looking to take their pound of flesh out of an industry or a sector, look out below for the stock prices. I mean, it's not good. I mean, how often do you have bipartisan agreement on anything? But Infotech, it's uninvestable. I've been saying that for months now. Let's take a look at Facebook. Disaster area, down 7.5% on the day. My God. Let's check out Alphabet, Google. Down over 6% on the day. A complete disaster area. The banks, they rallied today despite the gap down in yields. So I think that the banks are expecting a rally back on yields, and you had buyers moving into the banks, bidding up in anticipation of that rally on yields, and that means a pullback on bonds. And that money's going to find its way into the banks. Maybe you get some nibbling on the infotech names. All right, two positions, NUGT. Let's talk about this. All right, so I talk about the third standard deviation Bollinger Band all the time. And we closed above it on Friday, and I let it go. I didn't want to just simply bail on a position because we had a breakout and a close above the third standard deviation Bollinger Band. But today, as we rallied up and into resistance, I couldn't not protect the position. So I decided let's begin with a 20% hedge on the overall position, because what traditionally happens when NUGT, remember, I've been trading NUGT for years. Whenever you see a rally up and through the third standard deviation Bollinger Band, you'll get a retracement back down to the 20-period moving average, just like you saw back here. We didn't even close above the third standard deviation Bollinger Band back in January, but we tapped it, we pulled back, the 20-period moving average rose rapidly, and then we just broke out. So I'm expecting to see the similar thing occur here. Now, does that mean we can't press higher tomorrow morning? We probably will. And on that rally, I'm going to look to add more DUST. Let's bring up TrendSpider. Oh, by the way, I keep getting emails about TrendSpider. Folks, if you're a legacy member and you've been around since prior to March, I sent out, and I'll include it with the email tonight, the link to check out and get TrendSpider at a steep discount. I mentioned it a few times, but apparently I guess people didn't see it on those videos, and I even linked to it in the blog area and on the forum. So I'll send it out. It's a very steep discount. You have two different selections you could choose from. All right, so back to NUGT and TrendSpider. Okay, so here's NUGT. I think we could retrace all the way back down here to $17 per share, maybe $16.68. I don't think we're going to fill this gap here. You never know. But the 20-period moving average, which is here, is rising, and it'll probably coincide with these support levels by the time you get the pullback. Now, taking a look at dust. All right, so I want to look to buy more dust right down here at around $16.85 per share. And we'll hedge up to about 40% of the position on NUGT, and we will look to bail on the pullback to the 20-period moving average on NUGT. But we're not going to want to stick around long with DUST. All right, USLV, a rally today. How much did we rally? Almost 5% on the day. I'll wait for a pullback to add here. I just still don't feel comfortable. We still see topping action. I'm not loving the price action on USLV. I mean, it's going up. I want to see higher lows. I want to see it do some backing and filling before we go adding more here. Okay, the next chart up is Baidu. Now, Baidu closed out the day with RSI at 14.08. Now, we are seeing some signs of life here. Note the higher lows on money flow. You're seeing some money begin to filter into Baidu. Down volume continue to rise. You're seeing a double top here on ADX red. The Stokes have flatlined. MACD histogram. The trend is certainly improving here, meaning the selling pressure. But what matters most is support. Now, on a monthly basis, today was the first trading day of the month. We have a new monthly low right off the bat. We have a new weekly low. So where do I want to buy? right down here, $100 per share. I want to add more down there, maybe 99.71 around there. So I'm hoping for an ugly down day on Baidu, and we'll look to step in. We'll buy off of that support level. The next chart up, Renewable Energy Group. It attempted to rally today. No follow through on the bullish key reversal on Friday. We still have an oversold condition here at 16.60. Now, if we break to a new lower low, we'll have to take a look at the weekly chart. If we break down and close below 15.15, we're going to have to stop out of this trade and look to revisit it down at a 13 handle. So let's tighten up stops here. A close below 15.15 takes us out. Watch stocks, Nautilus. I was very tempted to buy today, but again, it all goes back to the fact we put in a new weekly low, a new monthly low. We have RSI at 10.91. Remember, we started watching it, I don't know, back here. And look at how far it's fallen. Some people back then were probably saying, this guy's nuts. There's no way we're going to see RSI 10. And here we are, RSI 10. Volume rose today. So where is our support? We could see 2.28. So let's let it come to us. EDC. All right, so now that we have the dollar, which is broken, we want to begin looking at the emerging markets plays. EDC is just skyrocketed up here. We're not going to chase it. It closed off the highs of the day, found resistance to the declining 20-period moving average. We're going to get a reprieve here in the next day or so. And that's a good thing. Let it pull back, and we'll look to buy some EDC. We'll begin accumulating a position because I think longer term, it's going to be emerging markets and it's going to be precious metals that are going to lead the charge higher. And that is it for tonight, folks. Everybody have a great night. I'll talk to you tomorrow.